Folks, it looks like we've got a rocket ship taking off, and it's not Jeff Bezos' ding-dong ship. You see how I said the word properly, so that way you don't get demonetized in the first 10 seconds of the video. But we all know what shape that rocket ship was, Bezos. Come on, we're not stupid. But Snapchat here after hours just reported earnings up 13% right now. Quite an incredible move. We can't lie to you here. I mean, that's what we like to call a good move. If you recall, obviously, all things considered, this should be a pretty nice quarter for them based on the fact that ad rates were at their really lowest point during this quarter last year. So we should see a pretty good comp year over year, in my opinion. Now, one thing that obviously I think is important for them to note here, they're going to need to necessarily, in order for the stock to go up really, I think the proof's in the pudding with the daily active users. It's a real big metric that Wall Street's going off of right now. For all of these social media companies, it's all about, for those subscription companies, they're solely focused about numbers. They only want subscriber numbers. They don't care about fundamentals. For these social media companies, they just want the numbers. They just want to know how many people are using the platform. So based off of these estimates, I'm going to expect that they probably did some decent stuff. I got to be honest, I haven't looked at these earnings yet because we give first reactions for you, okay? We like to be surprised, okay? What do we got here? Quarter two non-GAAP EPS line coming in at 10 cents. It's a beat by 11 cents, so it's good to see they actually did present some form of profitability this quarter, and a GAAP EPS of negative 10 beats by 8 cents. It's a good beat, but again, I still don't necessarily know how this company hasn't gotten to the point of profitability yet. I don't know what's holding them back, but I think they do plenty enough business. I mean, we're talking about a company that's nearly a billion-dollar company this quarter that couldn't manage to get profitable yet still. Definitely a concern. Obviously, it's been a number that they've been growing, but I think there should come a point where it's a drastic change. They're in a very high-margin industry. Really, they are. And they should be able to really turn that around. You look at a company like Facebook and the profit they're able to turn off of $27 billion of revenue in a quarter. They're able to turn half that into direct profit. Yet this company's making $1 billion and still losing money. That's where they need to really work on that, in my opinion. But we'll look at what that number actually equates to. The revenue line here, though, as I mentioned, $982 million, up 116% year over year, even up higher than I expected. It's a beat by $135 million. It's a significant beat for them for sure. So it's pretty impressive. The numbers are pretty impressive. Their global daily active users came in at 293 versus 290.6. I really believe that's why this stock's up, all things considered. I can't lie to you. Average revenue per user at $3.35 versus a 292 consensus. It's a good beat. I got tired out of nowhere. Who's to know? Who's to know what happened? I'm getting snoozy. For the outlook, the revenue is estimated to be between $1 billion, $1.07 and $1.085 billion versus a consensus of 1.01. So it's a beat on the guidance as well. Definitely a contributing factor to the stock being up. Adjusted EBITDA estimated to be between 100 to 120 million and break even, compared to 56 million of quarter three of last year. And again, this is obviously adjusted, so consider that. You know, seeing the stock, I mean, you got to consider this stock's already up 180% over the last year. To see an additional 13% here, it's quite incredible to see a jump like that. So almost shocked here what that might look like. Let's look at the press release, then we'll get into where the values here on this stock, okay? Daily active users increased 23% year over year. Good to see that. Again, I think that's a big reason for this. We saw the revenue number. Net loss improved 53%, so they cut net loss in half, it looks like. Definitely need to see the number first, which it's right down there. Whoop, whoop, whoop. Net loss came in at $152 million. I just can't. I don't get how they're still posting a loss like that. In my perspective, this company is matured enough. They really should be past this. I think it devalues the stock, in my opinion. I don't think, obviously, investors don't believe that, but I just don't know how they haven't been able to manage to figure that out. Free cash flow negative 116 million. This company needs to be able to produce free cash flow at this point in their lifespan. I don't know how they're not. I don't get it. They really need to, in my opinion, work for it. But again, that's the joy of being a larger company. You can raise capital to kingdom come. If you run out, you'll never run out. Okay. Operating loss here. We see a 38% improvement year over year is pretty nice. We like to see that. Net loss obviously increased 53. Adjusted EBITDA actually posted a positive number. That's right. Which is this 223% increase. They didn't post that last year, so obviously something positive to be said there. But there were reasons why their net loss was higher last year, and it was because of a lack of ad rates. That's a core business aspect for them. It's a reason why they didn't necessarily have as good of profitability numbers. But now that we're back to near record highs, I don't know what's holding them back. Free cash flow actually declined 41%. Somewhat concerning. From a 6-month ending standpoint, though, definitely up significantly. So I'm curious what was spent so much on this quarter. So I'm sure we'll see. But we'll see what that looks like. But free cash flow worse than last year. It's not what I like to see. Anyone else get super tired for no reason out of nowhere? That's just how it goes. Daily active users increased sequentially and year over year in each North America, Europe, and rest of the world, and on iOS and Android platforms. So daily active users, good to see that growth for them. Big time. Here they talk about some of the innovations they've made, content offering. I don't know who would ever watch any of these Snapchat shows. If I click on the right tab on Snapchat, it makes me want to vomit. I mean, if you've seen clickbait, I don't know if you know clickbait until you've clicked on the little stories page on Snapchat. It is horrific. It's horrific. It's just it's clickbait city. They know what's going on. They've had the world's most famous YouTubers must be making these thumbnails for them. That's all I can tell you. It gets people to click, I guess. I just wish people weren't so influenced by pictures of scantily clad women when the story has nothing to do with that, but that's okay. We saw the guidance as well. I do believe we got a balance sheet to be shown in here, which is something I like to look at. It's my favorite of all the things. I love a balance sheet, okay? What can we find out with Snapchat here? Let's look overall at the total current asset line. Right now coming in at 4.3 billion. That compared to 3.3 of 6 months ago. And you see where the growth here is. It's in the cash and cash equivalents position. Quite an increase there. So $1 billion total increase there. Total assets in general at 6.8 compared to 5.02. Most of that obviously because of current assets growing, but we see growth in this goodwill category as well as intangible assets, and other assets saw some growth as well. From a liability standpoint, liabilities did increase as well. Can't deny it. $748 million in current liabilities compared to 667. Most of the growth here in accrued expenses, not a shocker. Obviously, as you see, the free cash flow decline there. They probably weren't able to, pay off some of these debts. So, convertible senior notes increased quite a bit. Obviously, they had to raise capital, not a shocker. And total liabilities as a whole now at 3.9 compared to 2.7. So, increased around 1.3 billion. You saw assets grow by around 500 million more than that. So liability, or I should say, total stockholder equity at 2.9 compared to 2.3. So good, all things considered. The balance sheet's headed in the right direction. I don't think I like the size of this balance sheet necessarily. I'd like to see a lot more in the asset column. We're talking about, their full year revenue might be close to what their total assets line looks like. The liabilities, I don't want to see it increase necessarily at the rate it was. But they're going to have to if they can't figure out the profitability standpoint. Now, where do I feel about this stock? Look, this is a stock after today going to be trading probably, I can't lie to you, it's going to be right around $105 to $110 billion in valuation. I don't think it belongs there. I'll just be clear with you. I think this year they'll probably be bringing in $4 billion in revenue. You're telling me a $4 billion revenue company deserves over a $100 billion valuation? I don't believe it does. I really don't. This company's not doing anything incredibly innovative that's really deserving of them being that. People could flip the switch on Snapchat, pretty quickly as competitors get into the game. Really, it's just because it's right now a platform by itself that it's certainly something they could people could augment. I mean, there's no doubt people could take advantage of this trend and really create a similar product that slows their growth significantly. But I just don't think this stock's worth buying, especially after this 13% jump. I don't think it was worth buying before. I think this thing was highly overvalued, frankly. And you see some of that. I mean, there was some decline in the last month, but all things considered, this thing's just been up. It's been up a little too high lately. I can't lie to you. I don't think this is justified valuation here. We're talking $110 billion. This company's not worth $110 billion. And it won't be for a while. That's what I got for you today. I hope you have a good one.